welcome back to Full Circle with Mikali. Told you we're going to be talking about digital wealth management, and if you have no idea what that is, well, you're in luck because we have Thomas Ojanga in the building and he's going to be talking to us about all of this. Welcome to the show.
Thank you very much.
Digital wealth management. What is that? What is that? For anybody who's hearing this for the very first time, Thomas.
Let me give first background on wealth management.
Cool.
Before
we get into the digital bit of it.
Yes.
Okay.
Before you had rich people go to the bank and negotiate certain rates with the bank. So they founded what is called the investment banking or capital wealth management. So where rich people, what's called high net worth clients, go with a lot of money. Then they said, I want this, I expect this, I want to invest in this portfolio, put my money in the stock exchange, put it on real estate, and all this is the return. Right? Mm-hmm. So banks came up with the idea of having relationship managers in some countries. These people who then walk to the rich people, so the rich people don't go to the bank.
Yes.
And they talk about their money, right? So now, as things evolve, of course, we've got critical mass of people that is coming up, and banking by itself is also changing. So you have people with not so much money and people with very lot of money that are trying to make more money. It's the concept of banking. So how do you reach this? First, you digitalize the processes, that underlying processes that manage that portfolio asset management. You need to digitize that. And then the next thing is, how do you get the people to interact with their relationship managers, with their banks, without not necessarily going to the bank?
So we stop the walking around.
That's one thing. And of course, the manual processes behind the bank.
Yes.
And there's a lot of integration between the banks and the financial instrument providers all over the world. You might be Nairobi, but you want to invest in funds in Luxembourg.
Yeah.
That would probably go through mail. You understand? So it would probably be digitalized as integration behind. But also you might be in Kangundo.
Yeah.
And you're a farmer there, and you want to invest in I don't know, unit trusts that the president started the other day.
Yes.
So the most convenient way is if you had an app which connects you to your bank, to your relationship manager, so you can do self-directed investment.
Okay.
Right.
Okay.
So that's the concept of digitalization of wealth management, actually.
And that is where we are at now. We've moved through all these stages to the point where we're not even doing walk-ins anymore.
Yes, yes.
You just have everything happening on your phone, on your app, wherever you are.
Absolutely. And banking has changed, you know. In many parts of the world, I do 2 weeks here, 2 weeks in Switzerland, and I live in Switzerland. I don't remember the last time I was in a bank. I've lived there many years. I don't remember. Here, occasionally, you can still have to go to the bank.
To the bank,
but
yes.
I think the whole thing is changing. We had the strength of the banks here were more on retail, so people receive salaries and all that. They spend and they get a little money and all that.
Yeah.
But now, then they created savings accounts with very little interest. But as more and more people go into investing, then they want to get higher returns, so they move from retail, from savings account to accumulation accounts.
Yes.
Right?
Yeah.
Accumulations where you accumulate wealth to grow. So all these things must happen in a way that is digitalized because of convenience. So you can watch your investment and change as you wish and plan.
Yes.
Yes.
As your money grows.
Yeah, and one of the things that one of the propositions that we're making in this country also right now is what we call voluntary-based pension planning.
Okay.
All over Africa, I think we're the first people to do that in Africa. The retirement is an occurrence.
Yes.
So basically what happens is that people work their life, then they retire. Then they're given a provident fund. Somebody who's never done business, he spends most of it is probably in 1 week.
Yeah, and
Yes, and then it's left with annuity, which is probably 10, 20,000 a month. So basically, we're sending a whole big population into poverty.
Yes.
Then these people have got obligations, they've got wives, they've got kids and all that. And then all of a sudden, if the kids are not working, it's poverty.
Yeah.
If the kids are working, the kids now get an extra responsibility of taking care of their parents. And this shouldn't happen because if you've worked, the money that you worked for should actually take care of yourself in old age.
Yeah.
So what we've come up with is called voluntary pension-based planning, which a proposition we're making to several pensions and security funds across several countries in Africa.
Yeah.
And trying to tell them that, look here, the concept of retirement is a phase in life.
Yes, which will come.
It is a phase. I mean, when you retire, it's not like but now we're sending them to poverty and death, which should not be. I mean,
shouldn't.
Yeah. So what we're trying to do is say, look here, we have a platform, an orchestration platform. So we do voluntary pension-based planning. So while you're still working, when you start to work, you can say, when I retire at 60, I think, in Kenya,
Yes.
I will still have a young wife. I need to take a holiday. So I open an account for that. I will have 2 kids in college that I will still have to pay school fees for. So you plan that.
Yeah.
So and then I will have need to build my house in Magishagi, finally for pension, put that. So you plan all that. So your pension is invested according to these plans, because the accumulation of this money will depend on the timelines that you've given. But today, you just put money the day you retire. You told go to NSSF, go to that. You start chasing your money, and then before you realize you're
your
dead.
Employer didn't put some money for you.
You're dead. If your widow goes there, it's like, where's the administration papers? It's very complicated.
It is.
It's very, very complicated, and this is not good. So if you want to let the country grow, right? If you want to create wealth, we must start thinking about those issues.
Okay.
In this country, we have the NSSF Act 2013, which has not been implemented. It's 3-pillar system. 3-pillar system means the pillar 1 takes care of your basic needs, right? Disability, death, and all that. And if you die, your husband or your wife should be able to be taken care of immediately.
Yes.
As part, whether she's working or not, she should be entitled to that. That's by law, not implemented, but by law. So we're having conversations with the ministry and people responsible. Look here, there is no way you have this country grow until you change the way we look at the wealth that we accumulate.
Yeah.
So then the second thing is you have unemployment, unemployment insurance and all these other things. For example, if you've worked here at Switch for 2 years, for example, and you lose your job for whatever reason, yes, while you're still looking for a job, you should be able to get at least 80% of your salary.
Yes.
For some time. I mean, the system should be able to give you 6 months, 9 months, 1 year to look for a job.
This our system, this one.
No, this is what we are trying to create. Everything.
Society
goes through an evolution.
That would be beautiful. That would be
Society
amazing.
goes through evolution. So these are things, these are concepts that we're trying to push, because this can be supported by our orchestration platform.
Okay.
All right. We are also the first that brought the revolutionary lending platform called Stawi.
Stawi.
I don't know if you had heard about it. The president launched it in 2019.
Yes.
And talked about it at the UN. This is a concept from additive. Actually, because if you look at the lending platform here, it's regulated, or what you call legalized shylocking. It's ridiculous. I mean, we're on TV, but I mean, it's really, I don't want to use bad language, but the thing is this. There is no way you can be lending people at an interest rate per annum, which is higher than 14%, and expect them to pay. So what they did is that they created the Shylock systems, lending platforms here, whatever they call M-Shwari for leases and all this, which are ridiculous, exploitative. So you find somebody's telling you we have 6% per month, but cumulatively that's more than 72% per year. So basically you're taking half of the population to something called CRB. And then once they get into the circle of that, they can get a loan, they cannot get a house, they cannot get this. So basically you're sending the population to poverty. So when we came up with the idea, we said, look here, because you bring up the Uduma number, which is service number, which is unique, then you can have the government provide credit default guarantee.
Okay.
When they bring in the credit default guarantee, you can have that underwritten by an insurance company. And when you get that, then we can give credits at 9% per year, per annum.
Per year?
Yeah, the
That would be great.
No, the president launched it. I'm not even sure
Is
aware that
it
this
implemented?
thing is implemented because, of course, the whole society, the whole
Yeah.
Shylock society is against it. But the point of the matter is, in an economy
Yes.
with 6% inflation, the cost of the credit is only 3%, which makes it 0.25% per month. Now, the cheapest in the market is 6%, so which makes the other one 5.7% cheaper. That's revolutionary. All countries want it, and all countries are telling us, you guys are implementing Kenya, let it work, then come to us. We get calls everywhere. And there must be, my point is this, technology is an enabler. You know, technology is an enabler. And we cannot have exploitative programs in society. Society is supposed to grow together. So everybody must play a role.
Yeah.
Yes.
And you know, this is a very interesting conversation. I'm getting to learn a lot as well. I hope you're doing the same. We're taking a very short commercial break. For any questions that you have, Thomas will still be in studio after this break. 111 That is our SMS line. Send in the questions. Switch TV KE on Instagram. Switch TV Kenya on Facebook. We will be right back. Welcome back to Full Circle with Mwikali. We're talking about digital wealth management, and I see your questions already trickling in. Kuna moja hapa for you, Thomas. Morning, Mwikali. I'm Linus Kongani from Bungoma. I think digital wealth management is only good to the rich and those living digitalized life. What about those of us from Mashinani with nothing? Can it be of any help?
Well, thank you for that question. What it's saying is not necessarily true. What we're doing is also programs that actually are geared towards wealth inclusion.
Okay.
In the sense that this is, with our technology, you can any financial institution can actually target the masses. Today, you have, I think, one of the organizations in Kenya that recently launched a mass product is Nabo Capital. They're doing this unit trust for border and savings schemes. That's also digitalized.
It is digitalized.
Exactly.
But I think they're looking at it in a different way. They're assuming that is not what we're talking about, which is still is.
It's wealth. Wealth is wealth.
Wealth is wealth, for sure.
I mean, if you accumulate, you grow your wealth. Whether it begins from 1 shilling, you're growing wealth. So I think it has to do more with when people think about wealth, they think it's about a lot of money.
Which is not necessarily the
which
case.
It used to be, but anybody, wealth begins from somewhere. You can build that from the smallest unit upwards,
Okay, let's talk about the safety of this. We've had conversations about since tuanze zimeanza kushikanishwa everything, now we're losing our money, you use your card here, swipe left, right, center, the next thing that boom, there's nothing in your account. And this will be blamed for the digitalization of this. And they're saying back in the day, there used to be like, guys who would like rob the bank and just get in with their guns and stuff. But right now, at the safety of their home, they can just do a few clicks and boom, they have your money.
Let me make a disclaimer. We're a Swiss company.
Yes.
If banking doesn't work for a Swiss company, it can't work anywhere.
It can't, for
so
sure.
This doesn't apply for us. But nevertheless, let me make a comment.
Please.
The technology is as good as those who implement it are.
Okay.
There are mechanisms to secure transactions that are safe. All right? So if an organization, if an institution has got products, digitalized products with high vulnerability, then the problem has nothing to do with technology. It has to do with that organization. You get what I mean?
Okay.
Today, I want to give you an example.
Okay.
They have a typical case of swapping the SIM. Yeah. So if somebody swaps the SIM and uses your M-Pesa, who should protect that there's not SIM swap? It's Safaricom, not the client.
Okay.
Because there are enough technologies to protect that. If you have transactions that go through your phone, who should protect these transactions? It's the bank. Technologies for intrusion detection, securitization, all exist. And they've existed for a very long time. Now, to do that, you need to spend money. And to spend money, you have to work with the right people that understand financial services security. So now, if you walk on the street of Nairobi and you get somebody that is, I don't know, hawking IT experience that has no financial service experience, transaction experience, and you employ that person because it's your relative, and your systems are hacked, you can't blame it on technology.
Yeah.
You blame it on decisions that have been made by the management of that institutions. That's why legally, the obligation is with the institution that provides the products, services, not with the technology provider. But they extend that. They say, look here, before we procure our technology, how secure are your technology? So when you procure, as an organization, when you procure technology, one of the first things that you must test, if you're in financial services, if it's secure, before you give it to your clients. Okay. So if you give clients technology which whose security you have not tested, then you're to blame.
And is this a technology different for different institutions, or is it cut across all institutions?
No, I think in general, data must be protected.
Yes.
All data is sensitive. Whether it's got to do with money or with your private information is sensitive. So I think data protection issues actually cut across industry and sectors of society, not just for banks and financial institutions. I think organizations that have got sensitive data must take it upon themselves to make sure that those data are protected.
Okay.
Yes.
We went through COVID and most of the things stopped. We stopped working into banks, and some banks had to upgrade their systems, some systems that were not there before. We've seen people lose jobs or lose match transactions. Say, for example, these shops that you can go in and you have an agent and you can transact from there. Then all this was moved to the technology bit of it. Well, you can do it on phone and skip all these in-betweens between you and the bank. And some institutions were not ready for this. And some people lost monies through this. Do you think as a country we're prepared for this move, or we just hopped onto whatever was available at that particular time without, making sure that they are safe and good to go for the clientele?
Yes. I mean, the world will never return to the normal.
No, it won't.
Never.
Yes. That's true.
So those who accept that and adjust will survive. Those who don't will perish. This is true nature of evolution. You must always adapt to change. Today, with the pandemic, we know that it's safer to transact remotely or with less contact.
Yeah.
It's safer for the person, safer for the other person, or the two parties that are involved. So business engagement that involve a lot of physical interactions are getting less and less and less.
Yeah.
So if you're a business owner, you must think of new ways of doing your business. So I think it's not enough to say this has happened because of technology, but the situation is as it is.
Yeah.
So business owners must adjust. And historically, as you know, societies that don't adapt to change are the ones that perish.
That's true.
And that applies to business also.
For people who are, small scale business people, SMEs and all of that, trying to get into the business space, what would be your advice in terms of growing their wealth digitally if, they've come across this, or probably just getting into it? We've seen when Corona happened, most students went home.
Yes.
And they started businesses at that point because there was no school, and now they have to go back. What advice would you have for them in terms of, creating that wealth and being in the digital space?
I think particularly the micro, small, medium enterprises, they need to involve more with organizations that provide technology platforms that also benefit them. Number one, they create records which are good for credit scoring, for credit acquisition. Because if you don't have records, you can apply for credit.
That's true.
Now, if you digitalize it, your transactions are recorded. So the banks have it easier to judge you, to make calculations, projections on the basis of your data, and to give you credit whenever you want it.
Okay.
So now, if you're not digitalized, you probably have to go to the bank. They'll ask you for a logbook. They'll ask you for which is probably not on your name, and sometimes you don't have that, so you don't have credit, and if you don't have, you know, cash injection into your business, you can't grow.
Yeah.
So to grow, please digitize.
Wow. That's the message, I think, today.
Yes.
And, we can't come to the end of this conversation without mentioning that you are looking to get into the political space in this country. And maybe you can tell us more about that, Thomas.
No, today I want to focus on additive.
No.
When I do politics, I do it separate.
Just a little bit of that before we get to the end of this
good,
conversation.
Good.
Yes.
I think the country is going through uncertain times.
Mm-hmm.
I think as a country we need to focus more on unity and wealth creation and growth, cohesion, unity and stuff. It's unfortunate that you have political actors that keep on insulting our history. Personally, I found it very offensive that people could come out in the platform and insult the first lady of the country, Mama Ngina Kenyatta. Because when you do that, you send a very bad message to the future.
Yeah.
Because she is part of our history independently.
Yeah.
Whether her son is president or
Or
not.
not. Yes.
And if you don't like her son, he is the president. Wait until he's out, then you can deal with him. Mundu kumundu man. You get what I mean? So
Yes,
I
I
think
do.
those are unfortunate situations that we have. Then the other thing is the manipulation of society. You can never use technologies which are more than 100 years old to initiate progress of a society. So because of poverty, you throw money in and people come and say, look here, wheelbarrows have existed. It's not. I'm not making an attack right now, but I think technologies, societies advance on the basis of new technologies and innovation. Right now, digitization is big. Right? Mm-hmm. We need to focus people into that because the population of this country is 70% youth, actually. Mm-hmm. So you cannot bring the future, bring this group to a future on the basis of yesterday's knowledge, yesterday's technology. It doesn't, it's one truth that we should all be honest about. If we are talking about bringing this country forward, we shouldn't be involved in insulting each other. We should actually differ on ideas that catapult us forward, as opposed to let's go back, manipulate the population, get in the office and deal with the opponents. That doesn't work for me. So I think going forward, as you just mentioned,
I feel like I put you on the spot right there.
But I wanted to talk about additive. I wanted to talk about profession. I didn't want to talk about the politics. But the thing is this.
Yes.
I think they should tone down the political temperature.
Yeah.
Right?
Okay.
They should. Mm-hmm. They must.
Mm-hmm.
Another thing, the institutions that are mandated to protect our constitutional order and democratic order need to act. When you have politicians hiring youth to go and fight, disrupt, and all that, the people that are responsible for this must be taken to book. Because if you have all these things happening, you create a society in which people begin to think it's normal to keep a group of youths poor, give them little money, tell them go fight Raid Mwikali's funeral, or parents' funeral, or relatives' funeral, or event.
Yeah.
This is not good. So we need to. Another thing, we must understand that we are in the COVID pandemic. Having rallies of hundreds of thousands of people is going against government program to secure people. To secure people against COVID. So we need to talk openly about these contradictions. If we say we want to keep our country safe, we can keep the country safe without necessarily having to run into funerals and streets and all that. It doesn't make sense. The country is ours, and we need to protect it. So my final word concerning this is I want to urge the institutions that are mandated to protect the constitutional order and democratic order to take more charge. Okay. And if they don't have teeth, to ask for more teeth. Because without order,
yes,
in German they say, like Ordnung, without order, you can't do anything.
Yeah. So, but technology will be one of the things that you will be pushing greatly when you get into this space, or even where you're at even right now.
Right.
Yes.
I mean, we will campaign on the basis of technology is going to form a very fundamental and core element of our campaign.
Okay.
Transformation through technology, social transformation through technology.
Social transformation through technology. I think we have a slogan there. I'm not so sure.
For tomorrow people.
For tomorrow people, all the way.
Not for yesterday people.
No, not for yesterday people. But what will be your recommendations right now in terms of like this digital wealth management? What can be done right now so that people can pick up the lessons? What can we do now?
Financial institutions that don't digitize will die. I can tell you that straight.
Fact.
They will die. So we begin from them. Digitize. Offer digital products. There are many people offering that.
Mm-hmm.
We offer the best, but there are also many. Digitize. That's one thing. People who want to grow in their business, micro, medium, small enterprises, adopt the use of technology.
Mm-hmm.
It's good for you, it's good for your business, it's good for your growth, right? Third thing, Parliament of Kenya need to go back to review the laws that govern pensions and social security in this country. There are many contradicting and retrogressive. Let me give you an example.
Okay.
In most of Europe, social security funds, pension funds, contribute to more than 100% of the GDP.
Oh, wow.
In Kenya, it's only 35%. So how do you say you want to grow where you keep money lying? I want to give you another example, which I want to say today on TV.
Okay.
NSSF and maybe a few others have got about 400 billion in assets.
Mm-hmm.
This 400 billion, they distribute it to, for example, so-called custodian banks.
Mm-hmm.
These custodian banks then pay them 6%.
Mm-hmm.
All right? Which is then, after cutting operational costs and all that, then transferred to pensioners. The same custodian banks will take that to wealth managers and asset managers and investment managers who make 21%, 22% something. So the question is, where does the 16%, 50% go to? Right?
Yeah.
Those are questions we need to ask. If it's not going to the contributors, where is it going to? Now, what is 15% of 400 billion? Can build
that's a lot
the
of money.
super highway, 2 of them every year. You understand?
Yeah.
So imagine, in 60 years, you imagine how many of those super highways without credit. You understand? So these are things we need to start thinking about. It's not enough to go to Parliament to start insulting the other party. Think about those deep things that will transform society.
Okay.
Because leadership is about bringing in new ideas that can positively transform society. So at the center of politics, social transformation should be key. So we have, and I say it here on TV again today, say it and I repeat it, we have a lot of money pilfered from people that get lost. When the president said that Kenya loses 2 billion every day, right? And people went, God, how is that possible? That's nothing compared to what was. Actually, it was very moderate about that because that 2 billion is probably what is lost in KP and the port every day. So think about by the time you reach Mtitandei, coming towards Nairobi, how many losses by the time you reach Busia? It's probably even 100.
Oh my goodness. And it's sad that we have to come to the end of this conversation, Thomas, but how can people get in touch with, your institution for any questions that they may have that are still trickling in? Additive.com
without an E at the end, so you made a mistake. So it's additive, ADDITIV.com. info@additive that will reach us.
That's it.
I could give my number too if anybody want.
If you're comfortable with that,
Yeah,
why
I
not?
don't
This
have
is
no
your
problem
camera.
with that. It's 0728 996670. It's my Kenyan number, and we are at the Chancery building on the 8th floor.
Okay. Thank you for coming through, Thomas.
Thank you very much.
We're taking a very short commercial break. We will be right back. Her Royals Coffee Nurse will be here with her kettlebells. Don't go too far. We'll be right back.